Hello everyone, welcome to Smart Investing. If you want to know what is the fair valuation of AMD today and what is the fair valuation of AMD or the expected valuation of AMD in 5 years, so 2030, stay tuned. I'm going to show you the full fundamental analysis of AMD using only official data and 2 or 3 different valuation methods. Then you're going to have some scenario-based analysis. Then you're going to have extrapolation of free cash flow, earning per share, and you're going to reach the conclusions based on strictly a professional valuation model that I've been using when I was in asset management, and I'm using it still today to evaluate all my stocks and to train analysts and fund managers in asset management companies, even today. So stay tuned. I'm going to show you what is the valuation of AMD and what we can expect the valuation of AMD to be in 2030. So I have to tell you, I've developed a prompt, very detailed prompt. I can show you. This is the size of the prompt. You see, I've uploaded the AMD earnings statement, second quarter earnings statement. You see, this is the official data only. That this is a full prompt. Look at the size of the prompt. Something that I've developed through 1 or 2 weeks of work, just to fine tune everything, make sure that everything is correct, take into consideration every scenario. And then it will deliver. You put the ticker on the bottom, name of the company, and close the official report. You can even say to take it automatically in the website of AMD, doesn't matter. And then you get the full result here. So what I'm gonna tell you here is that, because I've just make it more simple here, because the model is quite detailed, so I don't want to burden you with a lot of details that you don't need. What you need now is to go through that, okay? First of all, revenue of AMD, $7.7 billion, is a 32% increase, just amazing. Earning per share gap estimate 0.54. It's a 200% increase from last year, just amazing. Non-GAAP gross margin 43%, just amazing also. Slightly below NVDA, but still amazing for a cheap company. Current price on the market, 162 at the time that I was doing this analysis. Today is 170. It's not a big difference, so we're going to stick to the 162 current price to reverse DCA and to see what is the assumption of the market to value it at 162, okay, or even 170 today. We arrive at a fair valuation of about 192. Recommendation, of course, is to buy AMD at current valuation. So you get, for the geeks, I let you read through it, so I go slowly so you can read through it. You have some highlight, top and bottom line result. We already go through it, but you can go and check it even yourself. You get some pre-flight data checklist where I'm checking all the quality of the quality of the data that I'm having in the earning reports. I'm cross-checking a lot of data to make sure everything is squared and fixed. All right. Difference between GAAP and non-GAAP, where it's coming, that difference. Very important to understand that. Then after that, we go through the full analysis of income statement. Full analysis of income statement is, we saw it, 32% increase on the revenue, 7% increase on gross profit, 23% increase operating expense. Operating income, you get a slight decrease, of course, but that's because of the one-off item of $800 million that AMD has taken because of the import ban. Then the net income, of course, has been higher from 265 million to 872 million. And why is that? Because you have also some tax benefit of 200 million that they have benefited basically from the impairment of the inventory that they had of 800 million. Okay, so normalization, of course, they have to adjust the 800 million for export ban. Otherwise, we can see the cash flow statement. Cash flow from operation from last year to this year is an increase of 68%. Capex 40% increase. Free cash flow 73% increase of free cash flow. Be careful because on the 2 billion free cash flow here, you have some discontinued operation, but I'm still considering the free cash flow that they have generated. Even if it's discontinued operation, I know that AMD on the statement, they don't include the discontinued operation, which is about $500 million free cash flow less, or cash flow from operation less, because they discontinue some operation. So AMD is even more conservative than I'm doing myself. So you have some guidance, of course, guidance of the management, 8.7 billion plus minus 3 million for revenue. Gross margin 54% non-GAAP, operating expense tax rate then diluted shares of 1.63 billion. So revenue for the whole year of 2025 is about 31 billion, and the consensus estimate is about 30.5 billion, which is very close to the guidance. Guidance is very reliable according to that table. The company released a lot of guidance. You see, from 23 to 25, you have an average of 1.8 billion revenue beat percentage and EPS beat percentage of 2%. I mean, of course, you have a lot more volatility for beating earnings per share than for beating revenue, but more or less the guidance is pretty robust from the company. Now we go down to the DCF valuation. You start with the 4 billion free cash flow trailing 12 months, and you go from year 1, year 2, year 3, year 5, and then the terminal value. If you're a gig, read through the numbers. So basically, you know, DCF is like you take the estimated cash flow for the next few years. Of course, you have to have assumption for growth. My assumption for growth is basically 30%, 25%, 20%, and 15%, and the terminal growth rate is 4%. We take a WACC of 10%. We calculated the WACC, of course, with the weighted average cost of capital of the debt and the equity side. You can take also the discount rate using the capital asset pricing model. In this case, you take the 4% risk-free rate, beta of 1.5, risk premium of 5%, and you take the peer is 9 to 11%. So everything just point to the 10% number. It's a fair WACC and is a fair discount rate for the base case. Okay, that doesn't mean you cannot do 9% or 11% to make some sensitivity analysis, but you have to stick to your base case first. Okay, then after that, if you do that, you have a fair value of 192 for the base case with a WACC of 10%, G of 4%. G is the terminal growth rate value, and you can shock from 9 to 11% and from 3 to 5%. So basically, you can see it can go easily from 165 to 235 just by shocking a bit the data and your assumption. So it's not an exact science. So you can say that the fair value of NVDA today at 170 is quite fair value. You know, it's good. It's quite good. If you buy at 170, you're not gonna overpay for AMD. Now you take the P valuation method. You have to have a bear case, bull case, and base case for PE valuation, PE multiple. First of all, you need to estimate the earning per share for each single years, and after that you have to have the PE valuation estimate. So you have the bear case 25 times, base case 35 times, and the bull case 45 times. And or you take this number 25, 35, or 45. Then you have to do it like the base case is the average of the peer group, average PE of NVDA, VGO, Qualcomm, TSMC, and so on, Intel. Then you have the average 35, and your average peer group is your base case valuation. The bear case slightly lower, and bull case slightly higher. Okay, you can see I'm shocking lower and higher. Then your earning per share estimate is here, 396 or 743. If you go to investing.com, the pro version, you get an estimate earning. That's the consensus for the peer group. You can see that estimate for 25 $4 EPS, then $6 7.43, then 936. Let's see if we take the same. $4 6.2 743. That's very much in line with consensus, and you can do the same for 28 29 is 9, and after that 10. Why you would stop at 28 29? Because there's not a lot of analysts that give that earning per share estimate in 28 29. Only 1 and 2 analysts there. But you see for 25 26 27 you have close to 47 48 analysts and 26, which is quite a good sample, you know, of earning per share estimate to use that as a base for evaluation of your share price. Then of course, if you do that, then according to your valuation of 25 base of $4 and this multiple, then you get a fair value of the base case of 136. Okay, and if you do in 26, if you take the $6 here, then you have a fair value of $210. So that's mean if you buy AMD today, then in 26 is pretty undervalued compared to what they expect in 26. And what is implied today, the valuation is 185. Okay, if you use the same valuation. Okay. So if you do the methods of enterprise value to EBITDA, it fits. This valuation method fits company with capex heavy. When you have a lot of capex, okay, which is more than 4% of revenue, then you can use the EV to EBITDA valuation methods. It's another multiple valuation model like a PE, but we are using the total enterprise value and we divide it by the EBITDA, is the earning before interest, tax, depreciation, and amortization. Okay, basically it's a representation of free cash flow, because if you add interest, tax is okay, but depreciation and amortization is non-cash item, and interest and tax is polluting a bit the earnings power of the company, because you cannot really control that. Okay, so again, you have to project the trailing 12 months EBITDA is about 3.5 billion, and you have to estimate that there is a growth rate of 28% of revenue. That is basically the consensus, and the margin is going to be 45%. Then, bearing in mind this assumption, you know that EBITDA growth on the bear case is 15%, consensus 28%, and the bull case 40%. Okay. Then you know that the peer group EV to EBITDA is 20 times for Intel and TSMC. These are basically the laggers in the peer group. The average peer group is about 30 times EV to EBITDA, and for the winners of the peer group like NVIDIA or AVGO is about 40 times. And depending on 20, 30, or 40 times, we have a fair value of 220, 320, and 400 enterprise value. So if you divide that by the number of shares of 1.63 billion, then you divide by 1.63, you get a $125 per share, $182 per share, and $230 per share. That's the fair share value of AMD today. So if you do a recap table, which actually blends the three different methods, DCF, PE, and EV to EBITDA, then you can have a blended valuation of $188 for AMD today, fair value, and expected value in 5 years of about $278 or $300 if you want to run that. It's highlighting the risk. China bans AI competition from NVIDIA, macro slowdown, execution of MI350 or MI400. So there are a lot of risks that you need to take into consideration. You have the probability of that risk happening, the impact on revenue, and the impact on share price. Okay, so it's very full detailed analysis of risk impact analysis. You have some catalyst timeline, basically near 1 to 3 months Q3 beats on MI350 sales. I think the next quarter is going to be a critical quarter to get some momentum going into AMD share price, because now they are ramping up the MI350 sales. So we're going to have the first number coming in the next quarter. So 3 to 12 months, then you have about, they're going to sell the business of ZT, then they expect a 3 billion cash sales. And on the long term, then they have to ramp up Helios, and they have to ramp up all the 400 chips series. So the conclusion is fair value is about 188, because I'm blended all this valuation here, and targeted share price 278 because I'm blending all this. So don't tell me, oh, you know, I'm expecting 250. Yes, 250 you can get. Is one of the possibility if you are bullish. So don't tell me, you know, oh, you know, you below what the market expect, what I expect or whatsoever. Yes, you can get 350 if you are very bullish. All your assumption of bullishness is fine. Then you get a 350, maybe 400. You know, or you can get much less also, because the bear case is starting at 190 in 5 years' time. Can go to 210 for the bear case. So you know, again, it's not an exact science, but you have to have some science to base your assumptions and to base your valuation. Okay. So I'm answering the question that I'm starting the video now. Fair valuation of NVIDIA 188. So if you buy it at 170, this is fair value. Expectation in 5 years around $300. So this is job done for today. So thanks for watching, and see you for the next video. Bye.